Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss a little bit about investments. Specifically, I had one of our viewers was suggesting making something about where to invest when you're exiting crypto. I talked to more and more people who are, of course, in a good position where they've made a ton of money off crypto. And it's kind of a question of like, okay, we're going to cash out, now what, right? And sometimes this is crypto-related stocks, sometimes it's just stocks, period. But a lot of the people who I'm talking to, it's something to do with crypto. Maybe you've made, substantially more money than you were expecting, and so you have to do something with it. And hypothetically, later on in the year, you're going to sell out, hopefully with this big profit, and you're going to take those gains and where do you put them, right? You probably don't want to sit in cash. That's, probably not that great an idea. So today we're going to discuss some of the ideas I would have, some of the kind of mental models I play around with in terms of where to put money. And I'm going to try and be a little bit specific in terms of, so if I'm talking about real estate, then, specific areas that I think are interesting, why I think they're interesting, etc. Maybe with a little bit of bias, we'll see. But also other asset classes. I was just talking to somebody earlier today who invests in crypto and is a venture capitalist and things like this. And we were discussing, it's like, okay, look, you have a preference for certain asset classes. That's quite cool. That works. That makes sense. What is it going to be for you guys? That's going to vary. Okay. Before we dive into that, if you haven't already, please smash the subscribe button, nail the notification bell. Really appreciate your subscriptions. Appreciate you getting the notifications. And if you would like help with international structuring, international tax planning, where to move, how to set yourself up personally, how to set your business up, pay lower taxes, how to get residencies, citizenships, unofficial citizenship programs, set up companies, bank accounts, etc. Please reach out to us. You can book a call with me, calendly.com/Michael Rosmer. There's a link in the description below, or Michael-Rosmer, sorry. And our websites, offshorecitizen.net, offshorecapitalist.com. You can send us a message through either of those. All right, so here's the way that I'm kind of thinking about it, right? When something is low, the risk to reward is pretty good. I did a video a little while ago about asymmetric risk to reward, the idea that, hey, you're risking, $5 to potentially make $50, right? Now, it doesn't mean you're going to make $50. You could lose the $5, right? But the point is that the ratio is pretty good. Now, the more expensive crypto becomes, the worse that ratio is, right? When you started investing in, the last when I started doing videos on the DeFi space anyway, it was, like early December, something like that. Prices were a lot lower. When I was talking about buying Bitcoin, it was, in the spring, right? So prices were a lot lower. At the time, it's like, hey, listen, can it go up? I think I was talking about $5,000 Bitcoin. It's like, hey, can it go up to 35,000, 50,000? Well, we're past that now, right? So the risk to reward starts to change. And at some point, you say, hey, listen, it makes sense for me to take money off the table. And the question, though, is if I'm going to do that, the only reason really to take money off the table is to put it into somewhere that has a better risk to reward. Now, it might be that cash has a better risk to reward in some cases, right? Cash is an asset. Cash is an investment. You don't have to always be invested in something else. But that being said, you have guaranteed risk in the form of inflation. It's just slow, right? So, it's going to take a few years for your, returns to erode, but they will erode gradually in that case. So you don't really want to keep the money there for the most part. That being said, I do think the first pot that we should be looking at is, hey, a pot for buying in when things are lower, right? There is something to be said for just saying, hey, listen, I'm going to sell out and wait for things to go down. And the truth is they might not go down, right? Or they, what do I mean by that? Of course, they're always going to be fluctuating, right? So, of course, there will be times when things go down, and there will be times when they go up. But it's possible that you time it wrong, right? It's possible you see something goes up to here, and you think, oh, it's expensive. I'm going to sell, and I'm going to try and buy back. And it goes way up, and then it pulls back, but it never does pull back to where you are in. That's fine, right? That will happen at various times. The point is, there's something to be said for just thinking, hey, listen, I want some cash around for good opportunities when the good opportunities come up. And maybe I'm going to leave that in stable coins. Maybe I'm going to leave it in cash. Maybe whatever, right? There's something to be said for having some powder and having it dry, right? That being said, a lot of people are looking for something more solid. So, for instance, I have a good friend who, he sold out of crypto pretty early on, like in February or something, and went and bought some real estate, right? Real estate, much more stable asset. So, for me, if I'm thinking about it, There's some interesting things about real estate that I'm thinking and paying attention to right now, okay? I'm not saying that these are necessarily going to be good investments. I'm just thinking about them from like a mental model standpoint of having benefits that I feel like I'd feel bad if I didn't take advantage of, right? So one is Portugal, right? I think that if you don't have access to the Schengen zone, buying a property to qualify for the Golden Visa, if you have a bunch of excess cash, just makes sense. Why? Well, I mean, you're parking some money. It basically gives you a free residency permit, which increases your access to the world and potentially leads to citizenship. It's possible you never get that citizenship, but it's kind of like a zero cost option. So, you know, if I'm gonna buy property anyway, if I'm gonna do something with my cash anyway, that's relatively stable. I'll park 350 grand there and say, hey, listen, you know, I've got an added benefit to my life. So I think there's like some merit to that if you're in a situation where you could benefit. And I think just thinking long-term planning, I'm for that. Number two, which goes along a similar line of thinking, is Turkey, right? So Turkey has their citizenship by investment program. You can buy $250,000 of real estate. It's, again, kind of like a free option, right? Will Turkish real estate do well? Who knows, right? That's a little bit more questionable. And certainly it's always deal by deal, which I'll cover in just a second. That being said, if I can buy a property pretty cheap and I get some okay cash flow off of it and I get a free citizenship out of the deal, if it goes down a little bit or if it doesn't appreciate much, I'm not feeling too bad about it, right? The flip side is, hey, it could go up a bunch, right? Who knows? That's a whole other, you know, the crystal ball is broken, not sure. But I'm thinking to tie up 250 grand, it's like just, it's a semi-safe place to park money that has a fringe benefit. So I like that. If I'm thinking about real estate, another market that I'm thinking about is Kuala Lumpur. For those of you who don't know, Kuala Lumpur, on inflation-adjusted terms, is cheaper than it was in 1997, okay? It is about a third the price of Bangkok. Bangkok's gone up a lot over the last few years. Kuala Lumpur really has not. Now you should ask, hey, why is that? So in my view, one of the big reasons why that is simply because of the fact that there's excess inventory. What happened was the previous administration gave out a lot of building permits. So if you go to, say, KLCC, you can see there's all these towers that are being completed, that are still going up. And if you go and walk through KLCC Park and you look up at night to, for example, the Four Seasons, which has been around since a few years anyway, you're gonna see most of the building is just dark, right? A lot of vacant units in these places. So I think the excess inventory has meant that it kept prices low, right? At the same time, you're in a situation where they have changed that. The new government has been more reserved about giving out building permits. And so there's a reasonable possibility that over time, the inventory is going to get eaten up and then the prices will start to rise as there's more scarcity. In addition to that, it was hurt by the weak Malaysian ringgit. And, you know, who knows what's going to happen with the ringgit, right? Is it going to continue to be weak? Is it going to be stronger? Who knows? Tough to say. But bottom line is, when I think about it, this is just for me personally, I look at that market and I kind of think to myself, I'm like, okay, where in the world is inexpensive and pretty good? Because you've got some markets that are good and they're expensive, and you have some markets that are bad and they're cheap. And you know, then you've got some markets that are bad and they're expensive, and we definitely want to avoid those. But where can I go that I can get good value? And as I look around the world, I don't see a lot of those places, at least not on my standards, right? According to my standards, most of the places that are inexpensive, I think are not that attractive. Most of the places that are attractive are expensive, and Kuala Lumpur is an exception to that. I would say maybe Turkey has a bit of that as well, which makes Turkey attractive, right? It's quite a cheap place, probably driven partially by the low currency, and you know, then there's some other kind of political concerns, etc. But that being said, what you can get for the money is pretty good. And so I just think to myself, 20 years from now, I think I'll probably regret not having bought at these prices. So if I'm cashing out $1 million or something, I'm thinking like, you know what? I think I'll go and buy some of that real estate. I'll park some there. Again, is it going to be a great investment? To me, that is not an example of something that is necessarily going to fly in the next few years. Maybe it will, maybe it won't, but you're buying it so cheap that your downside is probably minimal. And if you take a long enough time horizon, I think it's probably going to be pretty solid. So that's kind of my objective. Let's talk about things like precious metals, gold, commodities, etc. So gold is an interesting one. Last time, in 2017, I was advocating clients sell out of crypto and buy gold. And that turned out to be a decent trade, right? If you were to sell at, this was like December or November, whatever it was, 2017. Bitcoin was very high, gold was quite low. Gold, obviously has come up since then. So has Bitcoin, but that's a little bit of a different story. But nowadays I look at it, I'm like, okay, gold is pretty high, right? It's not super cheap. So do I want to trade a bunch of my Bitcoin or crypto money into gold? Maybe a small portion of it, but I wouldn't probably change a lot in there. What about stocks, right? Well, the stock market's at all-time highs. I tend to believe that the stock market and the crypto markets you can just look at the charts and you can see that there's a fair degree of correlation there. And so it's questionable whether I want to take my money from one and put it into the other at this stage. At the same time, I probably don't want to put that money into, government bonds, which are paying 1% interest or something. I'd kind of rather keep cash or rather keep gold, right? So what are some other alternatives? Well, this is where I think there's some alternative investments that are maybe interesting. So I've talked before about high interest loans. These can come in lots of different forms, right? You can go into various different markets where you can do equipment finance, you could do factoring, you could do something like secured lending on various different real estate projects. Any of those types of high interest loans, you need to kind of dive into, and I'll do another video kind of explaining some of the details of how to think about those particular deals, but that would be something. Another one that was brought to me recently, very interesting, is litigation finance. I think that's interesting. Film finance, I've talked to some people about that. Can be interesting if you get the right deals. So those are kind of alternative investment classes that give you something a little bit different. I think there's some really interesting private placement deals. So for example, there was one just last month, I guess it was, where it was a company that they were a public listed company. They were going public on the NASDAQ, so they're kind of upgrading from a lower exchange to a higher exchange. They were fundraising. And if you bought in, the deal that you got was you got shares. They were preferred shares, so they paid a fixed dividend. It was 10% a year. But they were convertible after 6 months to regular shares, but at a discount. So you got this kind of potential big premium, and there was some downside protection. So a very interesting deal like that, right? So some of those types of deals where I have some downside protection, but I also have upside when I'm not sure how the market's going to play, I think that's quite interesting. So those would be some ideas that I think are worth playing around with. In general, I think if you can get something that is going to put you, you're kind of trading out of a high risk asset into some of these others. The last thing that I would say to me is interesting is to go and pick some stocks or sectors of stocks that you think are quite solid and just dollar cost average into them. So let's use some examples, right? Let's say that I was to look at a company like Redfin. Okay, Redfin Technologies is a company that's basically disrupting the realtor space. It could be big, it certainly has lots of upside potential. Is it going to? I mean, it's one of a few that's kind of playing for that area. You have eXp World Holdings, which is another one that's competing. You have Open Door. You've got some different players in that space. But Redfin, I think, is, valuation is still not insane. It's got some good potential. There's a lot of good assets, et cetera. So in my personal portfolio, it's like, okay, the idea of dollar cost averaging into that, you're not really confident about where it is in the market. And so, the market could go down, you could have issues, but if you dollar cost average, you kind of mitigate some of that risk, right? So I think that's interesting. And a lot of the types of companies that like ARK Invest goes into, kind of some of these high growth companies where the upside's really great, but I'm concerned that I'm going to see some sort of a downturn. I think those are also interesting ones to dollar cost average into. I think it would be crazy to sell all your crypto and then just dump it into some of these, because these are, arguably high risk similar to crypto, right? So I don't want that. But to dollar cost average into something that has seemingly extremely good prospects over a 10-year time horizon and just know that I'm buying something that hopefully has good upside, and then just rebalance over time, I think is a reasonable way to go. So anyway, I hope that helps. Hope that gives like some basic ideas. It's certainly, not the be all and the end all. There's lots and lots of opportunities out there. But if you have ideas of your own, please put them in the comments below. If you, would like to talk to me about these sorts of things and, get some ideas, etc., please reach out to me. Again, you can book a call, calendly.com/Michael-Rosmer, link in the description below. If you liked the video, give it a thumbs up, share it with your friends, and I'm going to look forward to seeing you guys on the next video.